Hi, everybody. Welcome to our narrated presentation. For our narrated presentation and research project, we decided to look at the soybean industry over the past 5 years and look at some of the macroeconomic developments that had an impact on the microeconomic production of soybeans. In the group, we have Emily Rosenthal, myself, Hunter Winklepleck, Julia Kohles, and then Tony Weishaar. So moving forward, the agenda for the presentation, obviously we just kind of wanted to introduce the overall topic of soybeans, then move into the soybean economic markets, and then discuss some of the byproducts of soybean production, such as soybean meal and biodiesels, and how both of those byproducts are impacted by macroeconomic variables. So starting with the introduction, 47% of soybeans produced in the United States in 2016 were exported. So the international markets are a huge player in soybean production, and macroeconomic decisions can highly impact these industries. Do we kind of want to talk about international trade policy? Julia, is that something that you can discuss?
Yeah, definitely. So in July of 2018, a trade war was started with China, and that's continued based on both new and increased tariffs on both sides, has been presenting challenges to various U.S. industries. Despite the politicization of this issue, overall, the increased tariffs on the Chinese is a bipartisan and popular point of view. But in retaliation to the U.S. tariffs, China has continued to place import tariffs on various U.S. industries, making those goods more expensive than the alternative, which has resulted in decreased imports from the U.S. to China in response. China still needs supply of certain U.S. exports to keep various secondary markets afloat, so they have stopped these products elsewhere. With several failed negotiations in the rear view, there is a general wariness of the future of the commodities industry, such as soybeans. Emily's going to get into a little more detail about the economics of the soybean industry in specifics.
Right. So macroeconomic forces play a huge role, especially when it comes to the soybean industry. These economic forces relevant to soybeans would be inflation rate of interest, employment levels, demographic changes, fiscal and monetary policies, exchange rates, energy costs, and the state of competitive environment for which a firm operates. These forces can have significant effects on the soybean industry, both good and bad. How are the U.S. and global economies linked with the soybean industry? Well, they're linked by key factors such as employment, energy costs, interest rates, inflation, income levels, and currency exchange rates. And then these key factors discussed above can cause shifts in products demanded, products supplied, product productivity, and profitability, which then affects the macroeconomic environment. And then moving on to some economic growth, there's kind of three main stages that I found in my research. And first would be in the 1960s when Japan expanded its livestock numbers. With this became the need for feed for livestock, which increased U.S. exports of soybeans to then be used as livestock feed. Then in the 1980s and 1990s, when developing countries increased meat consumption due to an increased economy. With this, there was not enough supply of meat to keep up with their demand. Thus, there needed to be an increase in number of meat animal products, and that provided the need for increased soybeans to be used as livestock feed. Then in the 1990s and 2000s, when China more than quadrupled their soybean storage capacity, with this, they were exporting or importing U.S. soybeans 4 times as much as before, and that has continued to increase all the way until today. And you can see that in the chart below that China is the #1 exporter for U.S. soybeans compared to some other countries. And moving on to specific instances and data, African swine fever that is currently ongoing in China and is rapidly decreasing the amount of hogs that they have available, will reduce the demand for soybean meal drastically, and it's quite honestly devastating news for U.S. farmers. There will likely be a surplus of product this year because of that. And the next is the trade tariffs with China. President Trump's ongoing feud over trade tariffs with China is raising pricing concerns for U.S. farmers. This table below shows the decrease in prices of a bushel of soybean just from July of 2018 to April of 2019. And then the last specific instance that I'm going to discuss is a recent Midwest flooding in the grain belt region of the United States, such as Nebraska, South Dakota, Iowa, and Minnesota. They have all had historic flooding this spring. In Nebraska alone, over $1 billion worth of crops have been lost. And in Iowa, just one farmer alone states that he lost up to $350,000 worth of crop in the recent floods. There will likely be a shortage of soybeans because of this, and they have to make up for it somehow. So that leaves us finished with our macroeconomics of soybeans. Let's move into soybean meal.
Thanks, Emily. Soybean meal is a byproduct of the soybean industry. What is soybean meal? It's primarily used in animal feed as a source of protein and metabolizable energy. The growth in demand for meat and the demand for feeding livestock are all on the rise due to the rise in global incomes. With additional per capita income in developing countries, more animal protein will be demanded as a function of improved diets in those areas. As we will see, the nutritional value of soybean meal is important in the least cost formulations. As we heard previously, obviously we trade a lot or export a lot of soybeans and soybean meal to China. How has that affected us? Well, we know that we export a lot. However, we know that 3/4 of our exports are not going to China, which tells us that there are opportunities to downplay the effect the trade war has on our soybean industry. China is now importing the majority of its soybeans from Brazil, which has opened the door for us to now export to South Asia, North Africa, and the Middle East. Soybean meal used from the Asian countries like Japan, Taiwan, South Korea, and India has grown by 10 million tons over the last 5 years, compared with 19 million tons for China. Simply put, the trade war with China has currently decreased the demand of soybeans, but it has opened the door for other promising opportunities. Other macroeconomic trends affecting the soybean meal industry. The world's middle class is a major growth driver for the soybean meal industry. More money means more meat consumption, which means more soybean meal for feed. However, to continue to keep up with demand and still request a premium price, the U.S. soybean industry must show a value in their soybean meal. Studies have shown that there is a variability in the nutritional value of soybeans from the U.S. compared to other major exporting countries. Least cost formulation software has allowed the ability to create feed formulas that maximize the nutritional and economic benefits. The correct formulation of soybean meal with the optimal amount of digestible amino acids and digestible energy equates to the cost savings and strong animal performance. Achieving these optimal levels allows the firms to request a premium price level.
Thank you very much.
Kind of an overview of the soybean meal. The other byproduct is biodiesels, which Hunter is going to discuss.
Thank you very much, Tony. Great job on the soybean meal. So as Tony kind of discussed there, soybean meal is a very important byproduct of soybean production. Another one that the United States focuses on heavily is the biodiesel industry. So 30% of soybeans produced in 2017 and 2018 were used specifically for biodiesel production, which is a huge margin of the amount of soybeans produced. Macroeconomic decisions and regulations, particularly in the United States, have impacted the biodiesel industry and soybean production, and overall vegetable markets abroad. Macroeconomic decisions impacting these markets, I will be focusing on U.S. government mandates on biodiesels and their effects on the world market, more specifically the EPA's renewable fuels standard, and some of the environmental costs associated with soybean production. So U.S. biodiesel mandates. So there's been a few mandates imposed by the United States government that gave minimums for soybean production to be used in biofuels. So what they're basically saying is this is the minimum amount of soybeans produced that have to be used in biodiesel production. In one of the articles that I read, one of the biggest trade-offs there was food and fuel. So obviously taking away soybeans for food production and putting it in a biodiesel takes away from the overall global food market. And these studies tried to analyze the impact of these mandates. And when they looked at these impacts, when we're looking at how it impacted individual farmers in the United States, According to their studies, the price of soybeans rose considerably in that first study that they had done that I researched. However, some of the results for the actual mandates were much different. So the renewable fuel standard in particular was the main mandate put into place by the United States government and the Environmental Protection Agency. Many soybean producers, when this regulation was put into place, say that the mandate actually hurt soybean production. Say, for example, in 2013, before the mandate was put into place, biodiesel production was 1.8 billion gallons. In 2014, after the mandates were implemented, it went down to 1.2 billion gallons. So they hit their minimums, but then didn't produce any more. And then they also feared that the prices would decrease as a result of these mandates. And I want to talk about a little bit about the historical prices of soybeans on this next slide. So if you look, when the mandates were first started in 2013, you can see a sharp price decrease by almost 22% from 2013 to 2014, and the prices have not really recovered back to their 2013 levels. So it's very clear that macroeconomic decisions by the United States government highly impact the overall ability of soybean producers to make money within this industry. And looking at some of the environmental effects of soybean production, in a study that I looked into, when using biodiesels in farming production, emission impacts were actually improved, and farmers actually reduced their overall production costs slightly when they are producing soybeans for soybean oil and not just the plant itself. So instead of just using it for food supplies, they were using it for those biodiesel productions, and their overall production costs went down. The overall environmental impact of soybean production when producing for biodiesels and using biodiesels to produce was relatively low, but as you can see, there are some trade-offs with these new mandates that have made it a little inefficient to produce just for biodiesels. As you can see, many macroeconomic impacts put into place have a strong correlation to soybean prices and individual soybean producers and their abilities to succeed. Does the rest of the group have anything else to add to our presentation? Very good. Well, we hope you learned a little bit about soybean production, and thank you very much for joining us today.